Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So what I would like to do today is share with you guys 5 different companies that have beaten the S&P 500 in the last 10 years. And this is what we're looking for today, is total return. So these companies, they do pay some dividends, not a lot, but some dividends, okay? And they have beaten the S&P 500 in the last 10 years. So when you look at the total returns in the last 10 years, these companies have actually beaten the S&P 500. So what I would like to do is share with you guys the 5 companies. I will show you the data as well behind it. But before we do that, I would like you to subscribe to the channel if you haven't already. I know there's a lot of news, basically viewers that watch the videos every single day. Please like the video, subscribe to the channel if you haven't already, so you don't miss any time, anything we post. As well as, of course, if you can join us in the Patreon account, that would be really massive help to the channel, where you get access to all of these things, including the dividend, including the Discord. The Discord is where you meet a lot of brothers who are actually sharing good practices. They share every single day their buys, the sales, and everything else. And of course, I also contributed by showing all the buys and sales that I'm making regularly. So let's get back to the video. And like I said, these are 5 companies that have beaten the S&P 500 in the last 10 years. And when we look at it for total returns, including dividends and price appreciation. So before we do that, I just want to quickly go over the main things that we're looking for. As always, we're looking for the moat. Okay, so the market cap, the moat. The moat is basically what helps us to understand if this company has a competitive advantage. Every single one of the companies that we're going to look at today has a wide economic moat. That means they are either the industry leader or one of the main companies in that sector, in that industry. We're looking for the price, the dividend yield, the payout ratio, the latest increase, the 5-year growth rate, the dividend streak, the annual payout, the safety, profit margin, return on equity, return on invested capital, free cash flow, and so on. So the reason we look at these things is for the dividend, I want to see if these companies are paying dividend and if it's safe. For this part, I'm looking for where the company is profitable, whether the company has a management that actually cares about the business, reinvesting that money that we've given them. We want to see if the company has a free cash flow. We want to see where the company has been in the last 10 years, as well as the growth estimates for the next 5 years if you like, and of course the Morningstar valuations. And I always use Morningstar because I do genuinely feel they add a little bit of a margin of safety. So even if they say stock, for example, is $100 per share right now, sometimes I give myself 10% of margin of safety, which actually helps as well. Right, let's get started with the first company. And the first company that has beaten the S&P 500 in the last 10 years is Thermo Scientific. This company is one of the healthcare companies. It has a market cap of $221 billion. It has a wide economic moat. Right now, price is $580 per share. It has a dividend yield of 0.27. It has a payout ratio of 6% and latest increase of 11%. The 5-year growth rate of 16%. Dividend streak of 6 years in a row. The annual payout you will get for every share of this company that you own right now is $1.56. Safety is 72%. Profit margin is 14%. Return on equity of 13%. Now, return on invested capital is just 9%, which is a little bit low in my opinion. Free cash flow right now almost to $7 billion, which is nice. Total return the last 10 years has 17%. Growth estimate for next year is 12%. Growth estimate for the next 5 years is 7%. And then Morningstar is saying it's actually right now fairly valued. There's not that many companies right now in the S&P 500 that are actually fairly valued. So this is one of them. And its price target is $600 per share. And right now, as you can see, is $580. Now, looking at this, company is up actually almost to 10% this year. And when we look at the charts and we look at for total return in the last 10 years, I want to show you what the company has done. So total return for this company for the last 10 years of 405. For the S&P 500 is not even half of that, 174. So they have beaten the S&P 500 in the last 10 years. Now, the next company we're looking at today is Broadcom. Broadcom is one of the companies that I own in my portfolio. I wish I bought more of this company. I had to trim it not long ago as well. But great company, is one of the semiconductor companies. I'm doing a video basically looking at the whole company in the next couple of days, inshallah. So I'll share that with you guys. Currently, it has a market cap of $573 billion. Moat is wide, price 1,224. This is absolutely insane. Now let me just show you, okay, just let me show you how crazy that is, because my price, average price is $483 per share, and right now is 1,200 something. That's just how much this company has gone up in the last few months, in the last couple year and a bit. Dividend yield 1.7, payout ratio for 46%, latest increase of 14%, and that 5-year growth rate of 19%. Dividend streak 13 years, annual payout $21 per share. So every share of this company that you own, you get $21 per annum. Safety, we're looking about 67%, profit margin of 12%, return on equity 29%, and return on invested capital of just 10%. $18 billion of free cash flow right now. Total return the last 10 years 35%. Growth estimate for the next year 21%. Growth estimate for the next 5 years about 13%. 14% premium right now. 1,090 is where they think the price should be. And looking at Seeking Alpha, as you can see, a year to date, it's about 10% up as well. So not a lot for the year, but for 1 year it's 90% up. The last couple of months is just up about 10%. But 90%, can you imagine that? It's absolutely ridiculous. Right, let's look at performance side of things. Total return the last 10 years and against the S&P 500. So the company for the last 10 years has returned 2,391%. So that's over 2,000, almost 2,400. And the S&P 500 we've already seen 1,174. So the company has absolutely done a phenomenal job of basically giving shareholders a massive return, which is really, really good to see. Right, the next company that we're looking at today is Mastercard. Mastercard is one of the companies that I've included in the portfolio recently. $447 billion market cap, has a wide economic moat right now. $480 per share, dividend yield of 0.5, payout ratio 19%, latest increase was 16%, and the 5-year growth rate of 17%. Dividend streak of 12 years, annual payout $2.60, safety 99%, profit margin 44%, and return on equity of almost 170%. Return on equity, return on invested capital of 61%, almost $11 billion of free cash flow right now. Total return in the last 10 years of about 20%, 17% of growth estimate for next year, growth estimate for the next 5 years, we're looking at about 18%, which is absolutely huge. So I really like this. Okay, Morningstar saying right now it's fairly valued. It's still $451 per share. It's slightly gone up. So soon, if it keeps going up, it will probably become expensive. Okay. And it's only up about 13% a year to date. I say only, but it is, everything else has gone up so much, so it just seems it hasn't done well enough. So now looking at, again, similar thing. So performance, if we look at the last 10 years, you could see almost a 600% against the 174, which is absolutely huge again. Now, next company, these are really quality businesses so far. Okay, the next one is Visa. Visa and Mastercard, of course, will go hand in hand. Whatever Visa does, Mastercard does exactly the same, if not even better. 573 billion market cap. So Visa is slightly basically bigger, wide economic moat, $285 per share. Dividend is basically almost the same as well, 0.73, slightly bigger than what basically the yield side of things. Payout ratio 22%, payout ratio of 21%, latest increase was 16%, and 16% off in terms of the last 5 years. 15 years of increase in that dividend, $2.08 for every share of this company that you own. 99% safety, profit margin of 53%, return on equity 46%, return on invested capital of 34%, $19 billion of free cash flow right now, 18% in terms of total return in the last 10 years, and 12% of growth estimate for the next year. And then the analysts are expecting every year for basically for the next 5 years to about 12% growth. Fairly valued as well. $260 per share is where they should be. Right now it's heading towards that expensive side of things. $285, it's where it's at now. And now looking at Seeking Alpha, a year to date, 9 almost 10% as well. So not huge. Again, it's not as crazy as the Nvidias and so on, so it's doing what it needs to do. So 10% is decent enough. And when we look at the last 10 years, you can see almost a 500% up total return the last 10 years. That includes dividends and price appreciation against 174 for the S&P 500. And final company we're going to talk about today is Home Depot. You wouldn't think Home Depot has beaten the market for the last 10 years. Basically home improvement company, 369 billion market cap, wide economic mode, $377 per share right now, 2.42 dividend yield percentage wise, dividend payout ratio of 56%, so it's slightly high, but latest increase was 8%, 5 years is 14%, and 15 years of increase in that dividend. $9 is what you will get for every share of this company that you own. Is absolutely safe in terms of dividend, 87%, profit margin about 10%, return on equity 1162% right now, return on invested capital 40%, and free cash flow right now of almost $18 billion, and total return the last 10 years 18%. They expected the earnings to grow about 7%, then 5% after that, 41% premium right now, $263 per share is where they think the price should be. Right now is 377, so it is really expensive when you look at that, and it's always been expensive according to Morningstar. I've not seen Home Depot being undervalued for the last maybe 4 or 5 years. And finally, looking at what the company has done so far, so it's about 9% up since the beginning of the year. For the 1 year, about 30%. Wow, that's absolutely huge. Let's have a look at then the performance side of things. So total return in the last 10 years against the S&P 500, 502% from Home Depot is better than Visa. That's absolutely ridiculous. I think Visa was what, 490 something, 502%, which is absolutely ridiculous. So that's the 5 companies I wanted to share with you guys today. Again, you know, when you're buying ETFs and so on, you can find these type of companies. Okay, I own these 4 here in my portfolio, and I'm gonna hold them, you know, for a long time. So being that, you know, the S&P 500 is not always the target, but when you have some companies like this and you hold on to them for a long time, not just because of 1 year or 2 years, and I prove that to you guys, because Home Depot, well, not long ago was actually, I was down a bit, and it's been just sitting there and doing absolutely nothing. I could have sold that at that point. So I left it alone. I have not actually added to it because I felt it was expensive. Right now it's up 34% in my portfolio, so over £1,000. Now Broadcom, you've already seen almost 160% up as well. Mastercard is a new addition to the portfolio, is up to 2% right now, and Visa, it's been just sitting there for that 20 shares right now, is up over £1,000. Now that can happen. Also, the opposite can happen. Another, you know, and the company can go down 20-30%. So it's sometimes a bit luck, but sometimes you have to also do your research and find out. Use the data that's available to you before you make those decisions. Don't jump because you've seen some YouTube guys saying, "Oh, buy this stock." Just be mindful. There's a data behind it. Every single company is a business. Learn about the business and how to value it. Once you have some understanding, you do what you need to do, and then you start investing in those companies. Anyway, I hope you're enjoying this type of content. If you are, genuinely, it will help us massively if you can join us in the Patreon account. Like the video if you can't do that, and subscribe to the channel, inshallah. Have a wonderful day. Assalamu Alaikum.